So taking a look at the S&P 500, have we made any significant damage in the past, 8 days, 9 days or so?
Not in my work. It's really a very healthy correction when you think about the breakouts that preceded it. The S&P 500 had this great triangle formation in place and did break out from that formation, and that targets higher prices over the intermediate term. But short term here, of course, we're in the grips of a pullback. There's nothing about this pullback that's suggesting it's something worse, something that should be much more prolonged. In fact, today, we have the first short-term oversold condition since early April for both the Dow Industrials and the S&P 500.
It feels a little different today, Katie, in that it's not just the sort of trade war stocks that are getting hit, the industrials and so on. It's also the leadership group of technology. What are you seeing in terms of any sort of technical damage for tech, and at what point would you start getting concerned?
And because of tech, the underperformance today and the fact that there was such a divergence going into today over the last couple of weeks, that's why I don't think the pullback has run its course fully yet. I do think we'll see a deeper pullback in tech, but tech is the established upside leader of the marketplace. So I think a pullback there is very healthy and normal after the run-ups that we've seen there. Of course, there were new highs in the benchmarks representing technology. So here you look at it as a counter trend move, something to give you the opportunity to add exposure to various stocks closer to support on their charts. So I don't see it as something that will be long-lived, but rather something that should provide an opportunity and ultimately not have a major impact on market breadth or participation. A day like today is extreme enough that it could get us some oversold readings in the market's internal measures. So that's something we'll be watching in the days ahead, and we'll also be watching for that short-term oversold condition to lead to stabilization and improved short-term momentum.
Katie, whenever we have these big sell-offs, you look across asset, of course, to see the correlations, and really the credit market has been calm, even the bond market. I mean, the 10-year barely budged over the course of last week with all the trade tensions. The dollar's getting a little bit stronger, but do you see any signs of worry or panic in other places that would be a leader for stocks, or at least a correlation?
Not in my work. I haven't seen much of anything either. I do expect 10-year Treasury yields to pull back further from here. I have a bit of a contrarian view on the U.S. dollar. I think it will pull back and therein help give the emerging markets a little bit of a boost here, a much needed boost there. Some of the emerging markets look like shakeouts to me, which basically means a false breakdown. So I think we'll see some shifts on the macro front, but really nothing worrisome.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.